see this okay?
Yep.
It's full screen.
Thumbs up.
Perfect. So yeah, thanks so much, firstly, for having us back. Last time we were here was May, and a lot's happened, a lot of positive developments. So we're super excited to share everything with you all. Appreciate the time as always, Const, and appreciate you waking up extra early for this. So yeah, basically what Synth is building is, our goal is to build the world's most powerful synthetic data for predictive intelligence in financial markets and beyond. So the agenda today is to go through how we're kind of making this vision a reality. We're going to start by reintroducing Synth, talk about the progress of Synth miners in beating modeling benchmarks. We're going to go through an example of this. We're going to use the Black Friday liquidations, which happened on October 10th. Then we're going to jump into some more applications of Synth, so polymarket trading and how that's going. We'll give some updates there. We're going to introduce a new part of the subnet, which is being built, called Synth HFT, Synth High Frequency. We're going to go into applications of Synth HFT, talk about how we're expanding the prop trading and the application of Synth, discuss the current strategy around buybacks, and then go into the roadmap and what's next. So for anyone that doesn't know Synth and doesn't really, or hasn't thought about when we talk about predictive intelligence, what that means, the way we've been explaining it is that to be successful in markets, in finance, you need to build a model of the future, either in your head or some kind of model of the future. So retail traders generally do this in their head. They think, will BTC go up tomorrow? They might have a feeling, their friend might tell them they think it's going to go up. So this is kind of how they build the model of the future. Professional teams build models, simulations. They might look at indicators like RSI. They might look into ETF flows, and then they build out a predictive model using those data sets. We also are at this point now where AIs can collate millions of data points to build out much more advanced probabilistic models. And this is really what Synth is doing. So we're crowdsourcing these high fidelity forecasting models with 100+ million data points being submitted every day. We're scoring them, and the goal is that this predictive intelligence is going to be available to everyone and to us to build better probabilistic models of the future. And as Synth, our job is to take these models and use them to trade in financial markets and essentially drive growth back to alpha holders. We start to pay more and more for this intelligence. The intelligence gets better and better, and that's the flywheel. So this is essentially what Synth is. Right now, it's a competition between data scientists, miners, quants to submit 100 price paths and every hour for the next 24 hours. And they're continuously scored on how accurate these models are to the reality of the price movements of the market. So we currently do BTC, ETH, Sol, Jito Sol, and gold. And we're slowly adding more assets, and we'll talk about that a little bit later. So the big question is have things been improving?
Oh, did you lose James?
It seems so. Uh-oh. We're just about to get to the punchline of whether things have been improving or not.
Yeah, I know. I was really waiting for that. Let's ping him and see if he can come back.
1%.
Oh, he's back. James cut out there for 30 seconds. Uh-oh.
He can't even hear us. Perhaps ping him on a secondary channel and be like, yo, James.
Yeah. We've got someone, Amber, CEO, is panicking and messaging him.
No panic.
If you give him 30 seconds. If not, I can try and cover some of these slides that he's got and take over my part.
So I remember the previous presentation you did Sam, and each miner produces 100 paths. And is this example of one that we're looking at on the screen?
Yeah, so this is just a single example of one of their responses to one prompt for a single asset. There must be BTC at a given time. So the amount of data we're collecting currently is pretty vast because we're collecting this from all miners across 4 assets every single hour.
Yeah, that's tons of data points. That's actually like what, terabytes and terabytes.
It's, like 160 million a day data points. And then the idea being from that you can basically ask kind of any question you want of it. It's very like fundamental structure that this data is in. So you can ask anything you like. Oh, what's the probability that Bitcoin will be above this price at this time? What's the probability it will touch a certain price before a certain time? What's the distribution of the prices going to be at X point in the future? All manner of things, which we will hopefully come on to if James manages to return.
Which was, and I remember when I learned that from you guys, and that was actually like very interesting because I tried to do price predictions before in machine learning, but this kind of concept of you want to expand the domain all the way to the distribution of the price movement because you already are familiar with, like, you guys came at this problem knowing that the variance and that there's randomness. And so things like the standard deviation, as opposed to just like a one of the many possible outcomes, is more interesting.
Exactly. So it's some things that people assume are predictable are actually kind of close to impossible to predict. Like everyone out there wants to predict whether or not Bitcoin will go up or down. That can't really be predicted. But what can be predicted is this probability distribution of Bitcoin's future price in an hour, or what is the variance in this hour? What is the variance in 3 hours time? Because that follows historic trends, like daily trends. The variance goes up and down with a certain pattern. So those things can be predicted. And then we thought, so that was the initial idea. Okay, can we ask people to predict the variance, ask people to predict distributions? But if we ask them to predict these Monte Carlo simulated paths, we can then do anything with those down the line once we've got that data in from them. So that's the idea. Maybe in terms of fixing the presentation, if Amber wants to come up and take care of the slides, and then I will potentially jump through to my part of the presentation on the technical side. We'll go through that, and then hopefully James will have re-emerged and he can go through the business side.
I hope he's okay. He like really dropped off the face of the earth. Like, is he in England? Is England still, does it still exist? Was there?
I was worried that I was going to have problems. There's a pretty big storm in London. He's in Dubai, so I assume everything's fine there.
Okay. Well.
How about Amber? Is it possible if you get Amber to join? Amber, if you put your hand up here, and then you can, and I will reel off my part. Is that feasible? Or Const, if you have that link to the slides that I think Amber just posted, you can also take care of the slides. Maybe move to that, and then we can just talk through them.
Okay. Let's do that.
That's what we did last time anyway.
Did we do that last time?
Yeah, I think we had some technical issues our end last time with the slides, and I think you managed to take care of just showing off the slides and clicking forwards and backwards at our request. So if you'd be so kind as to do that again, that'd be fantastic.
Okay, let's try. It's not giving me the option to share screen either. This is odd. Can you imagine? My share screen is not even enabled for me as the host, the owner of the Discord. What? I've never seen that before.
I don't have the option either.
This is what we're gonna do. So I'm going to take screenshots and put it in there so that people can see, and then we can very, very easily bring this back together.
James is back apparently, according to the chat.
Hey, James.
I think he's taken the ability to screen share with him.
He took the screen share with him. Incredible.
Sorry about
I
that.
don't know how that happened. Yeah.
Okay, we can hear you, James, but no sign of the screen share yet.
Yeah, sorry. My internet just died on my other laptop. So I'm just gonna have to fix it and jump back on that one. Apologies for the
Can you
problems.
relinquish the screen share somehow so we can take over? Is that an option for you?
Yeah, I should be able to do that. 1 second.
It's done. So now I think I probably, right?
Yeah, looks promising. Okay, if you can open up the slides.
Okay.
Fantastic. Okay, yeah, let's jump to, so we'll skip James's stuff. He's going to talk about all the business cases. We can come back to that. Mine's kind of separate, so we can go to slide 9. So a few along from this. If you skip forward a couple of slides,
Yeah,
like 5 or 6 slides.
Let's go with 5 or 6 slides. All right.
Yeah.
5, 6. Here.
There, that's the one. 1 back, 2 back.
Here.
There, here we go. Okay. Yeah, I'll start with my part. So James will come back to the business side. On my side, yeah, we were here in May, and I gave this big overview of techniques the miners could use and that we'd recommend they should use to win this modeling contest, or to do very well at predicting the distribution of these parts. So the simplest model you could think of would be this, like, just come up with a normal distribution and select from that at every time step. But that wouldn't get you very far in the contest. So instead, you have to add things like kurtosis, which means like fat tails on the distributions. So most of the time in crypto, nothing happens, but then occasionally there are huge movements in the price. You've got to add in things like autocorrelation between the volatility. If it's volatile right now, it's likely going to be volatile in 5 minutes time, in 10 minutes time, but the volatility is going to kind of trend back to some base level. You've got to add into account variations in volatility during the day, like volatility is much higher during Europe and US business hours, and much lower at night, and then higher during the weekdays and lower at weekends, etc. So I went through that in huge detail last time, and there was essentially 1 or 2 miners or like mining teams or individuals, these data scientists out there, who are managing to take that into account. Since then, in the few months that have gone by, pretty much all the miners that have turned up or that are doing well are now taking all of those or most of those into account. This little table here gives a confusing overview of which of those properties are being taken into account. And generally, if it's in green, it means they are kind of taking that thing into account, be it kurtosis or autocorrelation. If it's red, they're not, and yellow, maybe they're taking into account a little bit. So
What do you mean, Sam, they're
these,
not? What do you mean by they're not taking into account? Like, as in, like,
for
their
instance,
distributions are always off by this amount in that way? What do you mean?
So yeah, if it was like kurtosis, for instance, which is a kind of measure of how sharply peaked this distribution is. When I say they're not taking that into account, it means they're kind of relying on just a normal distribution. They're using this predefined Gaussian curve, whereas you won't get too far with that in this competition anymore, because yeah, that's not how crypto prices or gold prices or commodity prices really behave. They have a lot of time where nothing happens, and then some time where there are huge jumps. And I think James will come back to some good examples of that.
So what we're looking at here, Sam, if you don't mind, is these are statistics that you've pulled out of all of their trajectories.
Yes.
And
yeah,
and these are things that are provided by the miners. So the miners didn't say I've picked kurtosis, 7.59, but you're able to see clearly that some of the miners they have a different type of distribution. And they're not just applying a random number generator, or I mean, but maybe some of them are like 1382201, who's like about halfway down the chart there. He's got a kurtosis of proper 0. And so you're probably expecting that he's not running like a complicated. He's not learning.
Exactly.
He's not. He's not learned model.
They'll just be running like selecting from a normal distribution in that case, and they won't have really checked. And you can see they don't do much else. They don't have much autocorrelation. They don't seem to. Oh, they do a little bit of within day variation. So I'd imagine their model will have looked at historic properties of volatility and will correctly map, like, okay, in the afternoon there's high volatility, at night there's low volatility, but they will just sample from a normal distribution to represent that. So we can we're at the point now where we can see what everyone's up to, and we can see that to do well, you said you have to do kind of all these traits.
Wow, that's brilliant. So this is proof, statistical proof that they're coming up with complicated distributions. And also proof that the top miner is the person that is coming up with the most complex of a distribution for the price, right? Where the top emission miner, who has 4 miners, probably just to test things out, is, to explain the different parts. So like you have autocorrelation. What's that exactly?
So that is, in this case, the autocorrelation of volatility. So it means if in my simulation I have high volatility right now, will I have high volatility in my simulation in 5 minutes time? So that's kind of how prices work. If you've ever watched crypto prices, okay, we're going through a volatile period. It's not suddenly going to drop back to just being kind of a boring market. It'll kind of stay like that for a little while. So volatility tends to spike and then slowly decline. So that autocorrelation is a measure of whether or not they're taking that into account. And then I think there's 2 different kinds on there. There's the autocorrelation within like 5 minutes, and then there's the autocorrelation over like a 1-hour period as well. And these are just kind of some of the stats that I picked out. We've got a whole load more. And then in theory, there's more statistics that I won't have even thought of, which hopefully these miners will be taking into account and might be the kind of differentiation between the top spots. So that's all kind of looking good, looking promising. The miners are, many of them are building in complexity. And as you said, it looks like the ones at the top are building in more complexity. There's a collection at the bottom there, which are interesting, who have kind of good models, but they actually just turned up pretty recently. Actually, in fact, this data was taken from the start of October. They turned up towards the end of September, and now a lot of them have actually shot to the top or near the top of the leaderboard. So it means kind of just by looking at this summary statistics, we can see good miners turn up before even our scoring system kind of catches up and correctly rewards them. So from a subnet perspective, we're in a good position with this overview to kind of understand what's going on and to kind of glean more information out of what they're producing. And if you go on to the next slide, then this is a good plot of the chaos of the leaderboard and the battles for the top spots. So that at the top of so this is a plot of kind of leaderboard position over time, with 0 at the top there being like the very best position, or 1 being the best position. And you can see this ongoing battle between different, well, we group them by axons, because each axon usually has quite like a handful of miners. And we monitor this battle over time, and we can see, okay, 1 miner has done well and either has improved their model, or the current volatility regime suits their model. They've taken the top spot for a period of time because we have some smoothing in there. The previous leader will kind of improve some aspect of their model and regain the lead. And we can see this happening with various groups. So there's a handful of people out there, data scientists, quants, who are kind of in the running for this competition, and they're all making kind of useful contributions to the data, which is good. And hopefully, if you go to the next slide,
how do you measure they're making useful contributions to the data as a whole, Sam?
Oh, that is a good question. We have a bit of a meta model that we are trying to work on building at the moment. We're not very far along that path. So right now we're essentially using the scoring to determine which miners predictions to use in the data that we put on our insights pages and that we use for trading. We have a few heuristics in there where we say, okay, we want to do some aggregation over longer time periods. We previously, when there was a bit of an exploit and some miners were trying to get lucky essentially and register a load of miners and kind of guess directions, we managed to kind of remove them from our final data. It's a bit manual right now. I want to try and automate it. I think it is feasible, but it's going to be quite tricky. I've got some ideas on how to do that with kind of feeding back our trading performance into this selection. But the ideal would be that our scoring function kind of does that for us, and we wouldn't need this additional kind of meta model layer. We are a little limited with our scoring as to how long we can smooth things over. If we could smooth over kind of an infinitely long time, or at least a longer time than we're doing, then that would bode very well for the top of the leaderboard positions and being able to pick out who is best. Right now, it's in a good shape. We've got an immunity, like a smoothing window of 10 days, but we're coming up a bit of friction, which I guess I'll come back to later, which is if we increase that smoothing window, we have to increase the immunity period. Then you get the issues around a load of miners could register and kind of take over.
Well, perhaps
so
you just
anyway,
need to have
this presentation yeah.
Perhaps you just need two competitions, like where at the beginning of the hour everyone submits their paths, and then maybe a minute later or 2 minutes later, people are allowed to submit another path given the information from the previous miners, and perhaps people will just copy each other, but also perhaps they would figure out meta models themselves.
I'm trying to think of other ways to kind of make it more collaborative like that, and to ensure it kind of get these enhanced network effects of people being able to build on top of each other's models. We've got a bit of this kind of feedback method by being collaborative in the Discord and kind of trying to discuss these strategies. I mean, I'm here on Novelty Search going through, okay, this advisable to use this strategy and this strategy so that miners can come in at a kind of higher level and build on top of people's knowledge. But yeah, there's definitely more we can explore in that area. And there's more we can do. There's some routes we can go down around trying to have a bit of a qualification competition so that we can effectively extend the initial immunity period so that we can extend the smoothing. But I can come back to that later on. For now, things are looking good. There's a contest for the top spots, producing good data. The miners are being pretty well rewarded, in my opinion. I mean, this a plot there, the second plot shows the daily rewards. It's up around the kind of 10K mark and has been for a month or so. And that top plot kind of shows the split amongst the different axons, which corresponds to different data scientists, quants, or groups out there. And so there is a decent battle going on amongst a few of them. With all this, people keep asking, we need a benchmark. How should we benchmark this? Like, is it getting better? Can you prove it's getting better? And James, in the hypothetical first part of this presentation that he'll come back to, had a few examples of those. But I've realized that to really kind of make people happy, the best benchmark we could show would be to use this data for trading and make money by powering automated trading systems with the data. So that's what about 6 weeks ago we embarked upon. So on the next slide, the first kind of avenue we decided to go down for trading and where we can make the most of these predictive models and the kind of volatility predictions they provide. We picked Polymarket. It seems to be all the rage right now, and they have a collection of these hourly up and down markets. So I can see why there'd be some confusion there, because I spent the whole time saying we're not getting people to do directional predictions. But with these up and down markets, you can trade within the time frame. So the market is, will Bitcoin go up within this hour between 10 p.m. and 11 p.m.? And most of the trading goes on within that hour between 10 p.m. and 11 p.m. So if it's in this graph between 3 p.m. and 4 p.m. So if it's 3:30, the price will have moved already to some point away from its starting price. So now, in order to be able to price the probability that it's going to go back up above the starting price, you really need this distribution of what the future price will look like, this kind of not quite normal distribution curve. And that's what Synth is designed for. So it's kind of perfect for this. And that's a little example there of how that would work in terms of these Monte Carlo paths. I think that's just 100 paths at that point at 3:30. So you take the miners' predictions at that time, count the number of paths that at 4 p.m. end up above the price that Bitcoin was at the start of the hour, and that's your probability estimate, assuming and hoping that all the miners have put a load of effort into correctly spanning this probability space, and our scoring system has worked as hoped and has picked out the best miners, then that should be a good estimate of the probability.
And so it's simple as saying if the betting odds are saying there's a 10% chance, but you think it's like a 20% chance, it's just an obvious bet. And you guys make it.
We then bet on that, and we built a whole system around it. So if you go to the next slide, that gives kind of an example of that. It might not seem like that exciting, the differences in these Synth predicted models. Okay, one miner's saying that the volatility or the standard deviation is 1 unit, and another miner is saying, oh no, we think it's 10% more than that, and we've said, oh, miner A is better. How much difference can 10% actually make? Well, the curves look very similar by eye, but if you actually kind of find out the area under those two curves, which corresponds to this probability of the price going back above that line, again, those areas look kind of similar, 15.9 to 18.2%, but that 2.5% difference for a betting strategy is huge. Like, I'm going to get, I guess, the punchline later on is that our betting strategy is running at 0.6% ROI, which is doing very well for itself. So you can conceive there that these kind of subtle differences in the curves, with that on the right showing what happens if you get kurtosis wrong. So that's a good example on the right there of someone who's predicting a normal distribution versus someone who's correctly including kurtosis, and their prediction of like really extreme events. And you actually get just a little bit of change in the shape of the curve, like doubles the frequency of the tail events there. So things that I imagine to most people seem very dull, just tiny changes in probabilities. To me, pretty exciting, because yeah, you can then start trading off of those differences versus other people's models. So yeah, any questions on that? I mean, kind of the concept of how.
No, not so much in the difference between a student and a normal. Obviously it's about fat tails, and that these miners are producing more accurate statistical distribution predictions of, or statistical distributions of the price of Bitcoin at any particular time. You said that you're making a 0.621%, or you said 0.6.
So I guess I've kind of ruined the big reveal there already. But if we go on to the next slide, so we targeted these markets and we built out this fully automated trading system. So in the top right there, we have a little diagram of the Synth subnet, miners being scored by validators constantly. They're producing all these predictions, restoring the predictions, building up the leaderboard. We then take that data of their predictions, put it into this Synth meta model I was kind of mentioning before, use that to come up with model probabilities at any given point in time for that hourly market. So we're partway through the hour. We need to produce what the distribution is going to be at the end of the hour, and look how much of that, how many of those paths goes above the price that it started at. Feed that into our trading system. Of course, we want to make this very low latency, so we consume prices from Binance, because the market probabilities are highly dependent on kind of what the actual price is at any given time. Any kind of slight movements in the price dictate massively whether the price is going to have gone up over the hour or down. So we build that in. Then take into account kind of market data from Polymarket to formulate our bets. And we do this really kind of continuously. at very high frequencies, place our bets, see which ones match, get the updates to the model probabilities, get the low latency price from Binance, and keep combining around this loop. And yeah, off the back of that, hopefully the next slide should show our performance so far. So yeah, we just started about a month ago. It's got very low stakes, so it's nothing too exciting. Well, I find it pretty exciting because it proves the concept works. You can see they're making, yeah, $6,000. In fact, we have another test account that we started with where we made $2,000 profit as well. So the total so far has been about $8,000 profit off what is, yeah, very low stakes, just testing essentially. So the concept works.
Is there enough liquidity to scale into this?
So yeah, I kind of come on to that. Yes, there is a lot more liquidity than we're taking advantage of currently. If we go on to the actually, I'll come back to that, I guess. But yeah, essentially yes. If we go on to the next slide, then it kind of gives a bit of an overview of like how this works, and the fact that we're just trading like at very high frequency multiple times within each of these hourly markets. So that graph in the top left gives an example of our what we call our liabilities, which is the amount of money we would win if that selection goes on to win, if it ends up or if it ends down. So this is just in that top graph, I think, looking at the Bitcoin markets. We're actually trading both Bitcoin and ETH. But essentially, this slide shows that we're never going below, I think it's $160 is the kind of worst possible outcome we've set at the moment. So in any given market, we can't lose more than $160. So it's kind of very low stakes. And yeah, we managed to kind of build that up to $8,000 profit in a month. And there's a bit of a distribution there of like our expected profit over time for each of these markets. With it still having quite a bit of variance. So it's not like we win on every market. You can see in that graph in the bottom right, which is this distribution of the frequency count of the amount of money we make in each market. What was the question there in the stream? Says, what was initial capital? Yeah, initial capital, we just started with $3,000. In fact, on the first account it was $2,000, and within a couple of weeks of testing we'd turn that into $4,500, and then we moved to this main trading account, started with $3,000, and that's now up at $9,000. So it's not capital intensive in its current form. And hopefully the next page should kind of talk about how we can kind of scale this up. So hopefully people seem pretty excited about that. I'm pretty excited. We put those results out on Twitter. And yeah, it's some very rapid growth of very low initial bankrolls. In its current formulation, so these are the kind of options you can have in my mind when you're trying to build one of these kind of high frequency in-play trading strategies. Either you can try and just take the model itself and bet the model against the market, which is kind of what you touched upon. You said, oh, the model says 20%, the market says 10%, let's place a bet. So that doesn't need too much work of implementation. That's kind of slow paced. And that does require a lot of initial capital to start making decent money, because you have kind of very high variance. You need to put a lot of money down on each market to get out a bit of profit. And that would take a long time to demonstrate profitability as well, because you're kind of essentially taking a few bets per market. So you have to wait a long time for the kind of variance to iron itself out, for you to be able to see whether you're profitable or not. Second option is to focus on being faster than other people. In that initial diagram, I showed that we were kind of consuming live Binance prices. You can focus on trying to get that latency down and get the latency of your calculations down, the latency of your bets into Polymarket or whatever venue down, and focus on trying to pick off stale money that's on the exchange. And the third option is market making. So for that one, you want to have really high reliability. You want to have a model that is kind of good all the time. It doesn't need to be ever kind of exceptional, but it needs to be good all the time with no flaws, so that you can put money up on both sides and make money from retail kind of matching your buy and sell orders. So the market making one would have kind of the lowest variance, model betting the highest variance. Our current strategy is somewhere between the low latency taker trades and the model betting. It's kind of a bit of a combination of both of those. And we found that before we scale further, what we're doing currently with our model is we're taking these 24-hour predictions that everyone's giving us with 5-minute intervals, and we only ask for those every hour. And so we're having to kind of fudge those quite a bit in order to extract something that's sufficiently fast moving for these hourly predictions. So we don't want to scale up our model betting any further because it's a bit of a fudge. Again, the miners producing very good 24-hour predictions. We're trying to use them here for the hourly markets. So we're trying to branch out into market making to scale up in that direction, but simultaneously we are launching, and if you go to the next slide, Synth high frequency trading, a huge upgrade to our subnet, because we're at a bit of a blocker now for our trading if we want to scale up. I think there is room still to scale up the current strategy, but to really accelerate the pace at which we can scale up, we are redefining the contest that we're asking for. We are splitting the rewards in half. Half of them will go to the current 24-hour predictions, and half of them are going to inspire miners to build much higher frequency, shorter timescale models where we're just looking over 1 hour time windows and getting people to provide price points at every single minute within that hour. And we're going to be asking people to do this much more frequently. Eventually, we want to get that as frequent as once every 2 minutes, potentially even more frequent. And we're asking for 1,000 paths because we're kind of held back a little bit by the noise of just asking for 100 paths from each miner. So this is the future of Synth, is getting people to focus on this competition and really upgrade Synth to like a big data kind of fully automated prop trading setup, at least for half of it. James is going to talk about the other kind of B2B half. So that's where we're at now. We've announced this competition. We still owe the miners a few more details on exactly how the scoring will work, but it will be very similar to our current 24-hour scoring setup. It's going to be built on these continuous rank probability scores and these proper scoring rules, etc., to ensure that everyone is correctly incentivized to produce probability distributions that correctly span the space of the future dynamics of asset prices. So yeah, we're pretty excited about this. I don't know if you've got any questions kind of so far on the...
First of all, these graphs are really psychedelic. They're beautiful. I'm sure you've stared at thousands of them, Sam.
Many thanks to Amber for putting those together. And
Yeah,
I don't know what the settings are.
You're looking at randomness. So the miners are going to have to respond every 2 minutes. Is that high frequency enough, though? Why not just continuously? Why not every second?
So this is a bit of a fight between me and, well, not a fight, but discussion between me and the guy that actually has to implement this within our team. Nathan is desperately saying, oh, can we reduce the expectations, at least initially? Can we change from 1 hour to 30 minutes, 1 hour to 15 minutes? I'm saying, oh no, can we just do every 10 seconds, every 30 seconds? It becomes a very big engineering challenge.
Right.
As we were talking about earlier, like Synth collects a huge number of data points, 170 million data points per day. This redesign would get us up to 12 billion data points per day. So to achieve this, we have to kind of redo how we're doing a lot of our databasing. We have to be much more on the ball with data transfer costs. There's a certain rate of data transfer speed as well within the Bittensor network. It seems like we seem to be capping out at like 6 megabytes per second as to how quickly miners can submit predictions. I think we have got some improvements on that recently. So it's all these things where to transform Synth from, I guess, what its initial plan was, which has been more like a B2B or B2C, kind of provide this data to retail, make the data so it's kind of good enough so that people can look at a probability, and it doesn't matter if the probability says 20% or 22% liquidation probability, that's good enough for retail. Transform this into a proper kind of fully automated trading system. So yeah, it's a big engineering challenge, but we are embarking on it.
Wow, big push. And so going back, I guess, well, I can just do my own slides. So you're pushing for basically the third option here, market making, where you're making, correct?
So at the moment, yeah, we're splitting between the first two, but to really scale up, we want to do kind of all three. Market making will be able to scale up the volume massively, as will model betting. And so, yeah, we need to tackle all three of those. But right now, we're kind of stuck in a bit of a limbo where we are held back, not by the quality of the predictions, just by the fact that the predictions are being made for these 24 hours. We need to make them for an hour.
And so yeah, and you need to make them all the time so that at any particular moment on that betting market, you can make a decision of whether or not you're going to sell like 5 shares of that betting market, and you're actually looking for divergence from expected outcomes. And so there's just, instead of having, I mean, I guess you've had 300 or 1,000 bets so far, I guess, previous year. What was it? How many bets have you had?
Far more than that. It's 55 bets per market. And how many have we had? We had like 1,000 markets now. So yeah, like 5,500 bets. That'll be right. It's like 1.3 million in volume with average bet size of about $20.
And this will bring you up to what? What's your estimation there?
So market making, we have been trialing it. We've been building out the system, and it substantially increases the volume. I would say without even changing the stakes, it goes up about 5-fold in terms of the volumes. That's still with low stakes. It's just the frequency increases to 250 bets or even more. Some markets we had like 500 bets down, where we're trialing market making. So that'll massively increase the frequency, allowed us to massively increase the volume, but it has to be paired with having a really good model. Otherwise, people will find kind of exploits. Even if we're out for a moment, someone can come along and take all our bets on one side and get a big position against us.
Thinking conservatively here, how much more revenue do you think that will mean for your subnet?
So if we skip a couple of slides further on, so about here. So yeah, so currently, what are we making? So yeah, it's like $8,000 in a month. From this is a very low stakes. We're currently a few percent, maybe 3 or 4 or 5% ballpark of the poly market, hourly markets. Hopefully we can scale that up in terms of volume, about 5 to 10-fold. Hopefully as well, we can retain the level of profitability while doing that. So the profit will scale by a similar amount. That is a little tricky to promise because it depends on the mix of retail money and kind of other algorithmic traders out there. If you start taking money off other algorithmic traders, firstly, they'll either upgrade their systems or they'll kind of give up and quit. So it's difficult. I wouldn't necessarily put a linear line on that. If we scale the volume up 10x, we're going to make 10x more money, but we're hopeful. So that's taking us up to a few $1,000s per day, hopefully, from just these polymarket hourly markets. Then you've got polymarket 15-minute markets they've introduced, 4-hour markets, the daily markets. So there's huge room to expand on polymarket. We've also been talking to the team there, and we're hoping there's lots of things that we can do where we can introduce new markets for them that they otherwise wouldn't be able to offer, where there wouldn't be other kind of market makers out there, be it for new tokens or kind of slightly exotic time frames or races between tokens, whatever it might be, whereby we will have a partnership deal with Polymarket and potentially get kickbacks there, or just have the additional volume from doing so. So that's just Polymarket. Then you've got other prediction markets, Kalshi, Limitless, Myriad markets. Hopefully many more will spring up. The profit that we can earn is really capped by how large and how long the prediction market hype lasts for. If you think it's here to stay, fantastic, we're going to do well. If you think it's a flash in the pan and people will stop betting, which doesn't seem likely, or it gets regulated out of existence, which also right now doesn't seem likely, then yeah, maybe we wouldn't do so well. But given how excited everyone is by Polymarket and Kalshi, I'm pretty hopeful that we're kind of well timed with this.
And why is the prediction market world the best place to apply Synth and not, say, the options market? I mean, I'm not a finance person, but actually purchasing options on the price of Bitcoin aren't those markets way more deep?
So yes, there is much more liquidity out there on options markets, which is very convenient you asked, because if you go one slide to the right.
We're really just working in tandem here, Sam.
Yeah.
It sounds like I'm just lay up.
Perfect. So yes, this is what we want to expand into. You have preempted us, and we're actually already on our way to building out a live trading system. So here's just an example of the volatility predictions from our subnet. Anyone who goes on the website and signs up can see these kind of every day for the 4 assets or 5 assets that are on there. This is one, I think, for gold, where the left-hand side of that chart in the yellow line shows off our predictions from 24 hours ago, and then the orange line shows off what the volatility actually was. So, I mean, that's just there to kind of show off the miners are doing a great job, it seems, at being able to predict volatility. So if they're doing a great job of being able to predict volatility, then yes, we should be able to do options trading on 0-day to expiry options, because that's kind of essentially what it comes down to. And for anyone who wants to see our options prices, they are live on the website as well. That table on the right is just a screenshot of our website. That's kind of updating continuously. We are giving those out for free currently. Maybe we won't give them out for free forever if we find that this works out. So on the next slide is how far we've got along with options trading. This is just paper trading so far. So we're kind of simulating, we're building out a system where we can simulate trading, monitor it all. And yeah, we are hopefully just a few days away from hitting play at very low stakes, trading either into Deribit or OKX or potentially Derive, and seeing how we get on there. So yes, I agree, there's potentially far more upside. Currently, the options market has a lot more liquidity than prediction markets do at the moment. Potentially, prediction markets will hopefully continue to grow. I imagine because of that, the options trading is going to be harder to win. Like we were, it's good that we started doing trading on Polymarket and we kind of started winning straight away. Fantastic. It might be ambitious to assume that would be the case on options trading. However, Synth is in a really good position. Like the Synth models are the worst they're ever going to be. People say that all the time about AI. It's the same for Synth. They're only going to get better over time. So even if options trading doesn't work right now, we can steer the contest in that direction and hopefully be profitable down the line.
Why is it that much harder? Why is it just a much more sophisticated market?
This is just kind of, well, it's kind of guesswork on my behalf. Maybe we'll turn this on next week and it will start printing money. That's kind of the dream. My assumption is it's harder because Polymarket has not been popular for that long, and these kind of hourly up-down markets are new. And even over the 1 month I've been trading on there, I've seen it the market kind of toughen up. There's been more algorithmic traders coming on there, improving their models. It's kind of gets harder to compete. So evidently it was at a fairly easy level like a month ago and is potentially still relatively easy. I assume options trading, big industry, been around for ages, is harder. Again, crypto options trading though is not as popular as typical options trading. So maybe it's going to be softer, I imagine, than like financial assets, and potentially Synth has inroads, or hopefully has inroads there, especially as we are paying a lot to miners to outsource all of the modeling. The aim of Synth is to be able to outcompete individual modeling teams in one location who are doing modeling for options trading, for instance. So I am hopeful that we will be able to beat it. We will see.
What we're looking at there in it's the second table, the call price and the put price. That is in some sense a distribution over the likely.
Exactly. So the way Synth is going to come at this from a kind of slightly different direction to traditional options traders. So if you talk to any options traders, they'll kind of go on about the Greek letters, like gamma, delta, etc., which is like the differential of the option price with respect to various properties. Synth coming from the other angle and just building up this like fundamental foundational data layer that you can then use to price options. So yeah, to price a call option, a call option kind of pays out linearly above a certain amount. So all you do is you take that payout function, you multiply it by the probabilities that come out from Synth, or the eventuality in the case of each path, and add those up or average over that value. So yeah, the beauty with Synth is therefore you can price kind of any option at any expiry time, which I think most other people with a top-down approach wouldn't be able to do. So we're hoping we can find a niche in these 0 day to expiry markets where I think a lot of other options traders won't have focused on, and requires kind of a lot more optimization of like volatility modeling over shorter timescales, which they may not focus on either if they're focusing on options that are expiring in 2 months. So that's the hope there. Cool.
Right.
And then I think yeah. Got any more questions?
Sorry.
If not, I think James, is your internet back, James?
Yeah, I'm here. Can you hear me okay?
Yes. Yeah. So you are
Cool.
hopefully going to explain, if we go on to the next slide, what we're going to do with all the cash, or maybe, I don't know if you want to take it from here, you want to go all the way back to the start. Maybe start.
Let's take it from here. I think
Yeah.
like initially we were just discussing, like the first few slides basically went over like the performance of Synth against like benchmarks, which has been like continuously improving, which is why we obviously felt confident enough to start actively trading. And as Sam said, improve the mechanism of the competition to enable us to trade on shorter timescales. So yeah, this is our alpha flywheel. We saw as the price of Synth increased, there was a lot more interest from miners and the models started improving. So that's great, system works. So our job is to make sure that there are sustainable rewards being given to miners. And our job is to take the predictions, or take the data, turn it into these profitable trading strategies, buy back tokens, buy back alpha, and ensure that the price stays high so miners are constantly rewarded and incentivized to compete and create these ever more powerful models. So yeah, the way we're like earning revenue, it's not just only from trading. We're looking at like selling the data, and we have the Synth app, which actually the last 4 to 6 weeks since we've been doing the Polymarket stuff is getting roughly, I think before we we're getting like 20, 30 signups a day. Now it's probably more like 50 to 60 signups a day through to like synth.co, like group. There's a potential there, but we also been looking with different tokens about listing them, and we have quite a nice offering that we can get them added to Synth. We can have miners modeling their tokens like we did with Solana and GTOSol. We charge them roughly between $50,000 and $100,000 for the listing, and then we can also go one step further and help these tokens get listed on prediction markets, on hourly markets, and we can actually do the market making for them. So there's quite a nice offering there, and we've had a good amount of interest. So yeah, that's super exciting. But yeah, the main thing is that like we're focused on building out a sustainable subnet and continuing to incentivize miners to bring us their best models.
So protocols, why is that valuable for a protocol? Basically they want attention on price predictions. Is that correct?
So like every protocol wants more trading volume on their token, basically. And they want more like price discovery, I guess. So for them, like the marketing of being added to Polymarket or Kalshi or Limitless is great. It means people are going to be interested in their token. It's great marketing. They might see people use the prediction markets for hedging their positions that they have like on chain. It's just generally like more volume for them is generally better. And yeah, more markets for people to trade their token is also generally better for them.
And so applying the same strategy that you applied from Bitcoin and gold to these other tokens, you can basically just add you can scale horizontally here with your miners potentially and say, hey, look, we want predictions on all of these low liquidity tokens.
Yeah. So, I mean, we're targeting like the top 50. We have active conversations with 7 or 8 teams. We can't like add a load of tokens at once. We've got to add them like step by step. But that's something we're looking to scale. Like between now and Christmas, we're aiming to add like 2 or 3 more tokens. Obviously, like, miners need to update everything, validators need to update. So, we need to give advance warning. It usually takes like, for Solana, it took like 2-3 weeks to go from like start to finish of that being added and the, good models coming out the other side for Sol. But yeah, we think we can get that down to like around a week. So yeah, in theory, we could be adding a new token every week.
Which of these revenue directions is the most exciting to you personally, James?
I think trading on prediction markets is going to continue to grow massively. I think that, yeah, as Sam said, like the reasons why people would stop trading on prediction markets, such as like regulatory issues, or yeah, the excitement of prediction markets kind of dying off. That seems very unlikely. It seems like the opposite is going to happen, right? Like regulatory, like the regulatory landscape is just getting better for prediction markets, like Polymarket's launching in the US, Kalshi's launching globally. They both have huge amounts of investment. They're doing like really, really good marketing. They're really excited, like both teams we speak to pretty actively. They're really excited about Synth. They're really excited about us, trading there, and are very happy to like, yeah, continue supporting that happening. So yeah, there's a lot of investment going into building out these markets and getting more retail participants. So I think this is only going to grow. I can imagine like volumes are probably going to 10, 20x in the next 6 months in general across prediction markets.
Very exciting.
I mean, yeah, not to forget the other kind of B2B offerings though, that we're hopeful about. Kind of the things we originally designed Synth for. Like when we do these ecosystem offerings to a new token, it's not just offering to get their token listed on prediction markets. We've still got the products of DEX integrations with liquidation probabilities. So we want to go to these ecosystems like native DEXs and offer them these liquidation probabilities to integrate with their platform so people can see, what is the chance of their positions being liquidated. We've got a product for AMM liquidity providers like Uniswap v3 liquidity providers, where when they're setting their ranges, they can see what's the probability of a range in a given time, how long will it stay in that range for, etc. The beauty of Synth is that you can build all these products on top of it because it's kind of this fundamental data. And if anyone out there has more ideas for products that can be built on Synth, we would love to hear from them. And I'm sure there's some deal that can be done there if they just want to provide us with the idea or provide us with introductions to people who would want the product or help build out the product. That would be fantastic.
Your miner community, like, tell us about the journey there. Like, who's come and who do you know is part of the synth miner community? Cool.
We have pretty good handle on their Discord usernames and how that maps to their axons and their miners for most of the miners. We haven't quizzed them too much on their real world lives. I think I'd love to kind of go down that route, making it more of a community. And I think maybe there's some more slides after this. There's kind of one point on this. Do we have another? Keep going a few more along. We talked about that. We talked about that. This, and hopefully in here somewhere towards the end. Okay, here we go. With regards to the miners, so ideally, I mean, yeah, our whole business now is trying to expand and get more miners in, better miners, more talented quants and researchers, data scientists. So anything we can do to aid in that, more than just kind of upping the rewards. Like, I'd love to see, like, we try and do some kind of marketing and outreach, but any marketing and outreach that can be done on the Bittensor level to try and attract like quality researchers and data scientists would be fantastic. And I've spoken to a few of the other subnets who are kind of keen on this. The other like prediction and modeling subnets, where it's really important you get on board kind of high quality individuals, talented individuals, and it's not just kind of a purely economic mechanism. So I don't know if you have any plans at the Bittensor level to do marketing to talented potential miners, in the way that other kind of data science platforms like Kaggle do, or whether it's something can be done with, teaming up with some of the prediction subnets like Score and Sport Tensor, to try and make a bit of a collective outreach.
And what does it look like when Kaggle does that?
Point on what their type of outreach is.
Mm-hmm.
I don't know what their marketing style is, but somehow Kaggle has got this kind of position amongst the data science community as being like a place for kind of showing off and getting bragging rights. Like the prize money on Kaggle is not that much compared to Bittensor, but it gains a load of data scientists competing on there, because they can then put it on their CVs, or they can show off that they won a competition or came in the top 10. So there's much more this element of bragging rights on Kaggle. If you're like a Kaggle grandmaster, then your job prospects as a data scientist are huge. And I'd love to find some way of bringing that to either just Synth or Bittensor as a whole, to be able to encourage miners to kind of show off and use it for bragging rights. It's a little difficult because right now miners, because the prizes are so large on Bittensor, miners aren't necessarily encouraged to show off in that way, because they don't want to attract more people to the contest if it means that they're less likely to win money. So it's a bit of a tricky one. But hopefully there comes a tipping point where it's so valuable to show off that you are a miner on Bittensor and you've done really well, that kind of level of value competes with the actual financial incentives. I don't know if you've thought about that.
It's interesting how that's the case. And now marketing is very powerful for bringing people in, especially if you're looking for scale. But isn't it the case almost always that in Bittensor we do find those people come, you don't know who they are, but the quality is there, right? And there may be it's like a deep iceberg of miners. Or do you feel like that there's skill out there that hasn't yet arrived at Bittensor?
I mean, there's definitely good quality within Bittensor, and like as we've demonstrated, like the miners we have are doing really well. They're very impressive at what they're doing, but it's about kind of trying to get like your money's worth, your kind of bang for your buck on the rewards that we're giving out. And if you have like more marketing to a wider field, then in theory you could get kind of better higher quality return on that money than if just the people that have heard of kind of Bittensor currently are the only ones that are like competing on there. I think there's definitely room for improvement. I don't think Bittensor has reached the whole world of data scientists yet. I feel
No.
only a small proportion of them will have heard of it. I don't know. You probably have a lot more insight into that than I do as to kind of what proportion of people know of Bittensor. But the more we can get that message out there, I think the better.
One thing that I think, and I've been telling teams is a good idea, is to have, to begin to maybe work with subnets on Bittensor where you have like an open source side of the network, because you have this full closed source side, right? And it's just an IP associated with an axon, and it's a pure signal, pure reward based game. But if you had an open source side of the network where maybe people were submitting their code that did this, you might find that number one, there's less of a steep learning curve, and also there's something to share, something to show. You put your name associated with the code that you wrote and explain to the world why that's valuable, and then you can have that intrinsic motivation to get attention because there's something to share, right? Otherwise, if it's just an black box IP, it's the most competitive game, but in some sense, it's the narrowest game. It's the most occult game.
Yeah,
If that makes sense.
Yeah, it makes sense. In fact, we are sort of going down that route with James. Do you want to talk about the partnership with CrunchDAO?
Yeah. So yeah, we're working with CrunchDAO to bring their machine learning community to Synth. It has not been officially announced until now. We're working on the integration with them. But yeah, that's one route. Like as Sam said, we're excited about bringing more people with data science skill set to Bittensor. And yeah, CrunchDAO, we spoke to them. We've been in contact with them for like quite a while. And yeah, they have a huge community of data scientists. And so they're going to become a miner on Synth, which is super exciting. I think in general, like to the point on Kaggle competitions, why people like them or bragging rights, I think a lot of it's because there's like corporate brands, like Jane Street did a competition around financial modeling. So lots of people are excited about that because maybe they can get a job at Jane Street if they win it, etc. Or work for another like big hedge fund. So I think that, yeah, we're experimenting with lots of different ideas around marketing. As yeah, we think there's still more people, there's still a lot more talent we can bring in because the rewards are so good. So yeah, that's a big focus for us.
Right. And when you guys do comparables there, like this is, yeah, it's Kaggle on crack, right? It's extreme Kaggle. And maybe there's a perhaps actually taking the, like if there was if there was a way to show that on a platform like Kaggle, you can maybe you can grab attention this way as well.
For sure. I mean, yeah, I've been posting a lot in the quant Reddits to try and get people excited. The quant subreddits. They're pretty hard not to get Bittensor stuff taken down, but I'm out there. So yeah, I think like yeah, we're just testing lots of different strategies.
Even in quant Reddits, of all places.
Yeah, the subreddits for quants, they're pretty active actually. They're quite fun. So yeah, I've been posting a lot about Synth in there and about Bittensor. And yeah, I mean, we try and tell people like that the rewards are great, and you're really contributing to like this open network. And it seems like we're seeing improvements in miners, so we want to continue that. And yeah, if there's a way to collaborate Bittensor wide, then also super keen to figure out how we can work on that and accelerate that.
It's probably a first for Bittensor that someone has got to signal production, said this is valuable, and then built a pipeline. And this is automatic pipeline for you guys, right? So going back to this, I mean, we've got a ways to go, but this one here, right? This is an automatic pipeline. You guys walk away, and this continues to roll on, right?
Yeah, should be running right now, hopefully.
It's probably made a trade in the time of this call.
Oh, we've made thousands of trades. We've made a trade in the last time you said that sentence, probably.
Wow. And it's pretty incredible, right? If you think about it, it's like it's you have this machine that's all the way from, you know, profit creation down to even the people that are making the algorithms, the high frequency algorithms, not high frequency yet, but they will be. The entire thing is liquid and adapting underneath incentive in some sense, right? From BTAU all the way to polymarket down to the miners and validators. And you guys are just kind of just expanding this funnel. And then one day, I guess you guys just go to sleep and you wake up and that's it.
Indeed,
Yeah.
keep it as fully automated as
Nothing
possible.
to do.
And there are many more aspects we want to kind of automate away. I mean, a lot of this, you still have the implementation side of having to integrate with Polymarket, expand the integration to Calci, etc. I mean, I've been trying to think of ways of like automating that process or putting that within the subnet somehow. If it does become valuable to have super low latency connections, can we put that within a subnet or within Synth, trying to get people to compete just on those integrations? It's kind of very interesting possibility. But yeah, it's remarkable at the kind of like the scale of this, the number of different elements that are being pulled in together from all these different miners competing, producing 170 million data points per day, distilling that down into these bets in a kind of fully automated fashion, pulling in data from Binance and Polymarket. It gets kind of, yeah, impressively complex to the scale of it, but good that it all fits together and works. So yeah, I assume we are hopefully one of the first to.
Yeah, you are. I think you're one of the first to get it into such a manual form. And the miners themselves, like take us through a little bit of like and this is where I do think you guys might want to explore an open source like side of the network where people can provide scripts they're using and you can compare them to like so that a new person, because you know part of the philosophy that I have about Bittensor is that it should allow people, you don't need to have a PhD, right? You can come and learn and apply yourself directly, and we don't look at your credentials. But if there's just no way to compete because these quant traders are, you know, they're 15 years in front of you, let's say, and the sophistication of their models is just so far beyond what you could ever do to mine. That's one of the things that makes it difficult or even impossible for a new person to join. You guys are looking for, you know, already credentialed quant traders, but perhaps you can grow them in-house if you have more of an open source competition. That's why I might suggest that you have that as well. But to that point, what do you think what the miner infrastructure looks like? So like, what are they likely doing?
Yeah. In terms of, yeah, I mean, what you just said there, yeah, sounds, it kind of Kaggle does that very well, as trying to onboarding new people and giving them kind of incremental ways to learn data science so they can then try and apply their skills in the competition. We'd love to, I'm keen to go down that route more and spend more time on it. In terms of what the data scientist is doing now, yeah, I imagine it's evolving over time. So they are taking some large historic data set from the past few years of cryptocurrency prices, distilling that down into a structure that kind of matches up with the competition that we have. So at the moment, like looking at 5-minute intervals. Now for this next competition that's coming up, looking at 1-minute intervals. So they'll have these 1-minute price changes from the last few years. They can then embark on a kind of semi-manual, like automated exploration of that data to see those kind of features that I was mentioning before, or what is the variation of volatility over a week? What's the variation of volatility during a day? Like, what's the shape of these price change distributions? Are they normal? And then they've got to go through some thought process of how to actually build that into a Monte Carlo simulation. And that requires kind of, that's quite a tricky part, I think. Kind of inspirational choices on their behalf. What's wrong now is a lot of this information is available through various LLMs. Like, I imagine a lot of people are doing a lot of back and forth with LLMs discussing this. So you could probably spell out the problem to an LLM, and it gives you a reasonable breakdown of things you could attempt. And then it's a kind of, they will build up this system, release it as a miner, see how it gets on, and then try and iterate on that over time. And I think it is viable for new people to come along and compete. It's not like people have had to have built up competitive knowledge from competing in Synth for the last 6 months, especially with the introduction of this new competition over the hour. I think it's very viable for people to turn up and straight away start making inroads and potentially get to the top of that contest. So yeah, I think that's what it kind of looks like. I don't know whether there are people doing this full time at this stage, whether some people have this is kind of their full-time career now, is just competing on Synth. I imagine it's people who have other quant jobs or are involved in the crypto space in some way, doing it kind of part-time alongside other trading strategies. But maybe these are things we should ask. And if we're saying we want more kind of openness from miners, then yeah, I think we should go down this route and try and explore like what they're up to, if they're willing to share that information. Of course, they might.
Well, I think what I'm suggesting is that you build a mechanism alongside this that allows you to extract that knowledge, right? So like actually provide us the scripts that you're building or that you're using, and then you can see what they look like and perhaps explore that. And that's something that's unique, like to, because there's already direct markets for things like risk analysis, just by the very nature of markets existing on on live platforms like Binance and Hyperliquid. But what they incentivize direct, it's very black box, right? Is what I'm saying. And with Bittensor, we can work with any type of state. We can incentivize not just predictions, but also software that makes predictions, for instance. And I think it would be fascinating. And it becomes when you're looking for that sort of intrinsic motivation for people, you could maybe get more of that if you had that open source aspect of Synth where people were providing these scripts. That's why I asked what they look like. So are they scripts or are they just machine learning models?
Oh, in terms of what they build, so I imagine what you essentially build is a machine learning model to kind of do the training to extract parameters for your Monte Carlo model. That's how I perceive it anyway.
That's what you said.
It might.
That's what you. Yeah, that's what you're expecting, but it could be anything, right? Maybe they're even like pulling the latest tweets.
Exactly. We don't know what data sources they're using. I was just assuming they would just use the prices, but hopefully the best people are pulling in other potential triggers of volatility. Like we assume people are pulling in information about the timings of like large announcements, because that impacts volatility pretty substantially. Like whenever we know there's going to be an American financial announcement, volatility spikes and people can know that in advance. So it'd be great to have an area where people can discuss that. And one,
did we see that when there was that? This is Black Friday liquidations, right? So did we actually see that in these distributions?
Do you want to talk about this one, James, or?
Go for it. I mean, you can see like the black line here is the actual BTC price, and you can see that Synth just about captured that there could be this amount of upcoming volatility, and pretty much all other models wouldn't have captured like this wide distribution of prices. So if you were asking Synth, where should I put my liquidation price, it would say roughly that's like 103, 104,000, maybe 105,000 for BTC. And yeah, in this case, you wouldn't have been liquidated as BTC price dropped just above that. So if you were saying I 100% don't want to be liquidated, where should I put my my stop loss or my leverage and have my liquidation price? Since Synth would have protected you in this case. So yeah, synth miners are getting very good at predicting these long tail events, or at least embedding them into their models.
I think with that one, so yeah, that would be asking, I guess you have tolerance of 1 in 1,000 chance of not wanting to get liquidated. I imagine, and I haven't actually checked what the volatility predictions were, but I can't imagine they had managed to preempt a volatility spike at that time because of the nature of what caused it. What I gather, it was kind of a planned attack by someone to kind of manipulate the Binance liquidations. So I'll be very impressed if someone knew that was going to happen and put that into synth. However, if you look at other announcement triggered kind of spikes where there is a scheduled announcement, then yeah, people take that into account. And then subsequent to this graph, if you look to the next day, miners would obviously be predicting a much higher volatility subsequent to this having happened. So it depends on the nature of the trigger of the volatility, I think.
We believe here at Bittensor that basically we can incentivize anything. So when Trump miner?
For
It's a joke.
I think someone probably has one now after this Black Friday liquidation.
I mean, when is Trump mining? When are we getting him on synth? That's the real goal.
We'll get in touch with his team.
Yeah, right. Try to reach out.
One thing that kind of follows on from this kind of having more openness and more discussions around what people are doing and what miners are doing. There's a slide that I kind of made for this presentation, but thought we wouldn't have time to get onto. But I can kind of talk about it now. Is one of the visions for like synth, kind of medium to long term, sometime next year, around trying to get a benchmark for AIs to compete on synth. So when I say AIs, in this case, I mean like LLMs. Like, I don't know if you've seen this Alpha Arena that's been launched recently, where they're having the various top LLMs trade against each other. But at some point, this industry that I'm effectively in, this kind of quant trading industry, is going to be completely revolutionized by AI. It's not quite there yet. Like it's changing how people work, and the people who are building miners will be using AI a lot to build them. But it's not at the point where AIs are kind of autonomously doing the whole kind of end-to-end trading, modeling trading. But there will come a time where that happens, and I just want Synth to be very well positioned for that, because we're in a kind of great spot to take advantage of that. So one thing I was thinking of trying in the near future is having the various top LLMs essentially one-shot a synth miner. Basically explain the competition to them, explain the nature of the code, explain a few different sources of input data that they could use, and have them try and code up a miner in one go. I don't know if they're quite at that level of capability yet. I think they might be close. But I think that'd be an excellent thing to have those miners running kind of owned by Synth and seeing how they get on the leaderboard. It'll provide a pretty good benchmark for the LLMs that I think people get pretty excited about. And in the process of doing so, we would kind of open source the direction those LLMs have got in, what their models look like. Hopefully, for the time being, the kind of humans will be out competing AIs. But if we have them sitting there on the leaderboard, then we can tell when that's no longer the case, at least.
Have you mined yourself on Synth?
Given it a bit of a go historically. I intend to give it another go for this 1-hour competition, I think. It'll be interesting to see how we get on. And maybe I can just do this as the controller of the LLMs, as the kind of man who types in the problem and tries to one-shot the LLM, so I don't have too much personal influence in it. Because that would give a lot more insight into this, as to what's going on. We already have quite a lot of insight, as we showed in that kind of initial slide. We're monitoring all these various statistics, the ketosis, etc. At some point, that will go out of, unless we stay on top of it, that'll go out of our view. There'll be kind of subtle factors that we don't even know are occurring. So it would be nice to get even more embedded, so that this isn't just completely green at one stage and we're kind of blind to what defines the best miners versus the 10th best. Which hopefully the direction it's going in. Cool.
I think it is. Well, James, Sam, it was lovely to have you on.
Yeah,
And
fantastic. Thank you for having us.
And what a checkpoint! Like 6 months later, you guys have gone from like, hey, it's working, but we're not totally sure, to, you know, now we have this revenue, you know, flywheel happening, and you guys are reaching out to Polymark and Kalshi to get. You're properly proving, not only with benchmarks but also with real revenue, that you're able to use this to build that flywheel, which I think is really exciting. And what a checkpoint! Thanks for coming on, guys.
Thank you very much.
Thanks so much.